Right, welcome to Coffee with Markus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. So, in this show, we are going to talk to you about what's happening in the markets and also how we are trading it. Today is Friday, January 6th, and quite interesting. Great day today. But let's talk about yesterday for a moment. Stocks were hit again yesterday. Bed Bath and Beyond was falling nearly 30%. Silvergate Capital plunging 43%. But today was the big one that we have been waiting for all week, the December's jobs report. So we'll take a look at this and how the markets reacted. And we'll show you how we are trading these markets. By the way, if this is your first time here, hi, I'm Markus Heitkoetter. This super smart guy over there is my head coach, Markus, and we're real traders who trade live accounts. So therefore, we got a lot of trading experience, and we're showing you how we trade these crazy markets. So trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're looking for some honest insights into the fascinating world of trading, you are in the right place. And Mark, we got to talk about it. Jobs, jobs, jobs. This was basically on the calendar for today.
Yeah, jobs has been the theme of the week, and we talked about it. First, it was Wednesday. Today, though, the biggie with the jobs report. You see that there's three items that the report consists of: average hourly earnings, non-farm employment change, and that unemployment rate. And a bit of a mixed bag there, Marcus.
Yeah, super interesting because earlier this week we already saw that the jobs market remains strong. And then this morning, when the numbers came out that the non farm employment change actually higher than expected, the unemployment rate dropping from 3.7 to 3.5. Usually, this would be great and we would be celebrating it. But right now, as the Fed is trying to slow down the economy, that's not good news. But
Yeah. Well, I mentioned it yesterday. I don't think the unemployment rate really is significant right now. And last reading was 3.6, so it ticked down a tick. The expectation was 3.7. But the real two key items on this jobs report was the non-farm employment change and average hourly earnings. And it seems as though traders responded or focused a little more on that average hourly earnings based on the reaction.
yeah, so let's take a look at this and let's actually jump on a chart, the E-mini Nasdaq, a 5-minute chart. And when the jobs report came out, a huge jump initially. Because, I mean, right now the Fed is really concerned about the increase in wages. And if you go back, the 0.3%, this is where the Fed wants to be. The Fed likes to be between 3 and 4% of wage increases. So overall inflation, the Fed wants to be at 2%, but for wage increases, they like it if wages are increasing a little bit more than inflation. I mean, ultimately, that's what we want.
Sure.
So, and we have talked about it. This is where it always helps if in your head you multiply this number by 12 and see, okay, if we would stay at a 0.3% increase in average hourly earnings over the year, annualized, this would be 3.6%, which is exactly where the Fed wants to be.
Yeah, but that's also for a healthy economic environment, right? Where inflation is reasonable at 2% and wage growth is outpacing inflation to offset it. But they want that down, they want that lower to combat inflation at this point. So, I mean, just being down was a good thing. And
Yeah,
so
so this
initially,
were a huge jump, and then, okay, wait a minute, but unemployment is getting lower, and so then back, and then super interesting, going into the open. I mean, really, right into the open, a huge slide, and this is where at first, if we look at the regular trading hours, it looked like, oh, traders don't like this at all. But then we had more
exactly.
economic news coming out.
Yeah, I mean it was kind of hard to figure out what the heck was going on with such a sharp reversal after the reaction, because there wasn't really any other news. It was just traders being fearful of the open, I guess. But then we had ISM services, and that index came in at 49.6%. We see that the prior month's reading was 56.5. The expectation or forecast was 55, and readings below 50 would be contraction, which again, bad news is good news right now.
Right, because this is exactly services. And that what Powell said the Fed is concerned about right now. The price of services increasing. So, and when the services PMI is decreasing and showing contraction, that definitely helps the story. And this is why right now, if you're looking at this, I mean, all indices are up, around 1.5%. So the Dow up 1.6%. The S&P up 1.6%, the Nasdaq up 1.6%. So right now, traders are liking it.
Yeah, and when there's uncertainty, you have that nervousness and cautious trading. Now that that uncertainty has been lifted, at least temporarily for the week, looks like traders are comfortable being long the market going into the weekend.
Yeah. The key level, though, today and probably also for the next few days will be the 3,900 level. Because if you look at what the markets have been doing, the S&P 500, we have been stuck in this range between 3,800 and 3,900 for the past few weeks. So right now we're trading at 3,870, so getting close to the 3,900 level. But this could act as resistance here.
Yeah, probably the tightest range we've seen in I don't know how long, to be
Yeah.
honest. This is a narrow range for the S&P. So you're absolutely right. Let's get that range broken to the upside and see some traction there.
Yeah. Also looking at interest rates this morning, I mean, a huge slide. And for interest rates, we see here a double whammy. I mean, first they were going lower um, based on the jobs report, and then with the ISM services PMI as well. And this is where we can look back now, see, okay, has this changed anything for the expectations of trader of what will happen at the next Fed meeting? And we see, yes, huge jump. If we compare this to yesterday we were at around 62%. And I mean, I think a couple of days ago when we looked at it, we were even at 55% probability of a 0.25% hike, now back to 77. So this is where traders say, okay, looking at this economic data, maybe what the Fed is doing is working. So this is where they're now a little bit more hopeful and enthusiastic today.
Yeah, I think actually when we did the session yesterday, we were at 55%. And so such a huge reaction to that ADP jobs, private payrolls. So now we're back. And
And when
I
we
mean,
talked about it, I
I
mean, the whole
expected
week,
even.
this is what we were waiting for. Now, looking ahead at next week, before we talk about what's moving the markets right now and our positions here, looking ahead of next week, we have Powell speaking, and then on Thursday, CPI data. So this will be the focus next week. And after this, we'll switch over to the focus being on earnings season. So it seems that we have a new flavor of the week every week. This week was jobs report, and it seems that we are ending on a high note. We'll see.
Yeah,
All right.
CPI will be interesting.
CPI will be interesting. Let's talk about a few individual stocks because there were quite a few stocks yesterday in the headlines. The first one was Bed Bath and Beyond. This is the meme stock that at some point everybody loved. I mean, you just see how crazy this stock went in 2021, where it came from around $4 or $5, going up to $50. And now yesterday, a huge slide because yeah, bankruptcy concerns.
I saw one analyst has updated his target to 10 cents. I don't even know how you come up with that, to be honest, but he expects it to slide to 10 cents. And hey, with the way that it's looking, who knows? But
Yeah.
rough couple of days for Bed Bath & Beyond.
Also in the news yesterday, Silvergate. I mean, this is a bank with a huge exposure to cryptocurrencies, and they had massive withdrawals in the last quarter as a fallout of the FTX. I mean, we haven't talked about it in a while, but this is where we see some effects right now of this FTX collapse.
Sure, sure. The more that we know, and just the web that was created and how it impacted so many different companies. I mean, this one it's almost not so much of a surprise, but it caught traders off guard.
Yeah. And then Tesla. Tesla, 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 Tesla. I mean, right now bouncing back a little bit, but this morning down again. I mean, this downward slide, Tesla just gets I mean, the hits are coming because this is where news actually from Tesla is that Tesla is cutting prices for some models in China again. And that's not good for Tesla as a company. For inflation, yay. I mean, it's in China. But still, it's showing that it seems that they are building too many vehicles. I mean, for the longest time, there was the concern, oh, Tesla can't keep up with the demand. And right now, it seems that the demand can keep up with Tesla.
And do you think that there's more downside for Tesla, or do you think that we've settled down here?
I mean, right now, we're still in free fall. And if you're looking at the chart, there is no support lines anywhere to be seen. And we've been warning about this because Tesla has been popping up on the scanner of PowerX Optimizer as a possibility of selling puts. But just because it pops up on the scanner, you don't want to take it blindly. So this is where some people thought, oh, yeah, well, this would be probably good to sell puts at 180. Tesla will not drop below 180. And then some people might think, okay, 160 might be a good level. Now we're getting close to the $100. I think that $100 might be a line in the sand, but who knows? I mean, right now, nothing seems to stop this fall of Tesla.
Yeah, I'm not trading it, so take it with a grain of salt. But I have a feeling that we're going to settle down around 100, 110, maybe be in a little bit of a range where traders are trying to figure out what to do.
Yeah.
But I'm not touching it.
No, and we talked about it for weeks, right? When it started popping up on the scanner that we are not doing this. Now, on the other hand, we have talked about Apple, for example, and Apple is holding up really well today, also having a good day, up 2%. So that's a possibility. And then let's take a look at the positions that we are in right now. And the big one that is moving today is CTRA. Again, after dipping here below $23, right now trading at 24.30 again. We got a sign at 26. My
Yep.
break even is at 24.86. So I'm getting close to my break even here. But at this point, I'm more interested in selling calls at 26.
Sure, sure. And we mentioned it yesterday. This is, even though we're down a little bit, this is reacting like I would expect a position to react if we pull back a little bit. So this isn't, a crazy move or totally unexpected. I was looking at calls, 26 calls for next week. There just wasn't enough premium there. Line in the sand for me would be 17 cents for next week. There you see that 30%. Potential or to get that 30% ROI. So 17 would be a minimum. At the open, when there was some movement, it was, bid five, offer 15. Maybe you get 10, but just not enough.
Yeah, that's. I was looking at it and I thought with the jump here that maybe, but it seems that we have to push a little bit higher. So probably close to 25. So we have still a little bit to go, but definitely back on track here with this one.
Yeah,
Nvidia, another one. So this year also still stuck in this range here. So also very interesting, very similar to what we have seen when we looked at the S&P 500 earlier. Stuck in the range here. Want to see right now at 145. So nice day today, up almost 2%. I want to see that we are going above 150. With my cost basis at 160.91, I do believe that once we go up to 150, I might be able to sell the 162.50 calls or the 165 calls. So doesn't seem that it is happening today, but this could be something to do early next week.
I like it.
And the Googles.
The Google.
The Googles, the Googles, the Googles. So here, this is where my break even is at 104. Right now, we are trading at 86. And I mean, even today, Google is still lacking a little bit. So it's really interesting to see what's happening here with Google because this is right now more like overall than performing like the Nasdaq, right?
It is interesting, and I mean, when we first started talking, Google actually was negative, and it's like, what? Everything else is up. So just some real interesting behavior there. But hey, it is what it is. Um, and yeah,
Yeah,
well,
so right now we cannot sell calls against that. And I mean, today with the markets overall up, not much going on the conservative scanner. We have AMD, we have Coinbase, Illumina. That's another one that popped up recently. I'm not too interested in any of these that popped up here. What about you? What do you think?
yeah, you've marked a couple of those as no's, and I would agree in AMD. But at this, I would, if I was looking at AMD, I'd be looking at a lower price based on the current ranges that we have in AMD. And yeah, that's not too bad. But I was talking about this with a mastermind trader in a mastermind call yesterday, and yes, with the information that I had at the time, getting into AMD, I'm comfortable getting into a trade and managing it if it's a company that I want to own. But we saw that ADI, as an example, that was an alternative that has been trading fantastically this year in some really nice ranges. So if I was looking to initiate a new trade, would I want to trade AMD that's gotten a little beaten up and had some of these bigger swings, or would I rather trade ADI that has been in a nice range? MCHP is another one, Marcus, where you have a highly correlated position, and MCHP, that's a great looking chart. So even though I own an AMD and I'm comfortable managing it, I think you always need to take a fresh look when you're considering opportunities and see if there's something that's correlated that looks better.
Yeah. By the way, before we continue, is this helpful as we are going through this and show you a few opportunities and possibilities here and what we are thinking? If it is, give us a like and we'll take a look at a few other ones because, I mean, this week there were quite a few that were popping up at possible candidates. I mean, Apple popped up, our mastermind members, some of our mastermind members took the Apple trade, which I think was good, and they were able to close it yesterday already with a profit. For us, it was too correlated to Google and NVIDIA, or for you, Google and AMD. Therefore, we skipped this one. Another great one that popped up was Oxy. And this is also another trade where probably today you can already take some profits. I do believe that when we looked at it, the 59 was available
Yep.
when we looked at it earlier. And right now it's trading at 64. So, I mean, if you sold the 59 put when we talked about it earlier this week, definitely a good possibility. And then didn't we also talk about Devon Energy? Devon Energy, another one. I do believe that this is where we were looking at the 56 earlier this week, and also this is working out great. I'm just curious, what is WSM doing? That was another one that popped up. Williams Sonoma, I think,
Nice.
huh?
Yeah, no, that's been popping up the last couple of weeks. We traded it, I think, a month ago, but we've had some traders trading that, and that's been trading in a nice range too.
Yeah. So right now, also today, a big pop of 4.4%. So if earlier this week you sold some puts, either they expire worthless today, or you can just close them at probably 90% of the profits, maybe even 95% of the profits, if you want to free up buying power. But it's very unlikely that we are dropping back to the levels where you were able to sell puts before we did. Anyhow, so today with overall the markets being up, so if you're going back to the indices and seeing what's happening here right now, we are still trading close to the day's high. It seems that right now the up move has stopped a little bit, and we'll see. We may pull back a little bit because it seems to be a little bit over enthusiastic, but traders are also ready that we break out of the range. And traders and investors, by default, are positive and they're looking for opportunities to invest in the markets. Right now, a lot of money is sitting on the sidelines that is waiting to be deployed in the markets because in this first week of trading that we have, traders were like, okay, what's happening here? Santa Claus didn't come, and last year was the worst year since 2008 for all three indices. So there was a little bit of orientation week, I want to say, and I think that next week we might actually see a follow through, and hopefully for the S&P a break above 3,900, and then we talked about it. Next level will be the 4,000 level where we have the 200-day moving average.
Yep. Right now, S&P up 0.7% for the week, so up 1.5% for the day. So we need to stay above 0.8%. to lock in those gains for the week. Start off the new year fresh with.
Let's see if we can start off this year on a positive note. Okay,
Yep.
anyhow, if you'd like to know more about how we trade, I'll pop a few videos right over here so you can click on these to get a better idea of what we are doing here. If this was helpful to you overall, give us a like, and then we'll see you again next week. Have a great weekend.
Happy trading, everybody.